This conference will now be recorded.
Good afternoon and welcome. Welcome to the Clear Lines training session. I am your host, Kipp Cohen, here for the next 60 minutes to answer your questions about the Clear Lines indicator running on the MedVed Trader platform. This is a twice weekly training session every Tuesday and Thursday at 3 o'clock Eastern. It is geared for the subscribers of Clear Lines or for those that would like to learn more about Clear Lines and the MedVed Trader platform. Today's session actually is going to be a little more focused. We're going to be talking about using a simple moving average to help manage risk in a trade. I am recording this session and it will be posted to the equity-alerts.com YouTube page. If you have questions, you're welcome to ask them through the GoToMeeting player. There's a chat box. I do ask that you please keep your microphones muted. At the very end, I'll try to open up for a general Q&A if you want to actually ask me a question on mic. I'm open to that as well. If you have questions outside of this training session, you're welcome to email me, kip@equity-alerts.com. You can also text me on my cell phone at 972-841-8886. So I want to thank you guys for joining me today. It looks like we have quite a few of you with me. A lot of our regular Equity Alerts customers, as well as it looks like a handful of additional new viewers today. So I appreciate you guys being here. And again, don't hesitate to ask any questions if you have any. And you can ask that through the GoToMeeting player. So a couple things real quick. We utilize a platform called MedVed Trader. It is a third-party trading platform that was developed by two guys that actually had a quote tracker was their prior platform that was bought out by Ameritrade years ago. We were introduced to them. I was introduced to them back when I was with Wise Trade and Ally Invest. And when I was looking for somewhere to support my clear lines, we discovered that the working with these guys made a lot of sense because they already had a platform. It integrated with a lot of different brokers. And we quickly discovered that there was a lot of great, powerful tools associated with the platform. So the clear lines basically appears as an indicator that is subscription based to get access to it. That comes with support and training. And then of course all the additional off the shelf indicators that they offer. So in the last 2 years, as we have been using MedVed, and the markets are constantly changing, and we trade the very same strategies that we've been trading for roughly 20 years now, trading poppers and droppers, trading off support and resistance, fading tops, going long off bottoms. That's kind of our standard method of trading. The markets obviously have gotten pretty volatile lately. We've seen some pretty wild swings, and where we've seen some days where some stocks just don't even stop; they just keep going and going. So yesterday actually was one of those days. I'm going to point one out to you guys, and it's Jinko Solar. This stock actually, let me do this. I'm going to show you something. I'm going to go to historical chart. historical would be your long-term, mid-term, and short-term. This is the daily chart of Jinko Solar. Literally, starting in early September, this thing began its move. It has not had a red day since the 14th. Well, technically the 11th of September was the last red day. It's had a green day every day since. It has gone, since it went green, from $22 to almost 60 nonstop. Obviously, at some point, stocks tend to pull back. Yesterday was one of those days. We had a handful. We had a few traders in our group that were shorting it and actually got stuck in it. They decided to stay overnight. Thankfully, this morning the stock gapped down. They were able to get out in profit, and it turned out to be a good trade. But last night, one of the things I started thinking about is what can we add in that would help buffer against these trades? What can we utilize as an indicator that would help us mitigate risk? And so I've always had on one of my other charts a moving average, a simple moving average of a 20, just to kind of look at to see when we're above and below it. So I started playing with some of the additional moving averages, and I looked at a 14 period on my 1 minute chart. So that's right here. And actually at the open in the first 45 minutes, I'm on a half minute. But what I discovered was that if you are trading, let me actually look at Jinko Solar. If you're trading counter against that SMA, you run a higher risk of loss. So, and let me look at, I'm going to show you yesterday. So yesterday, I believe that is yesterday. No, hold on. Yesterday morning, this was on a rip all morning long, just kind of kept going and going and going. And every time it stayed above that EMA, it just was barreling higher. Now it did fall below it a couple times, but then it went back through it and barreled higher. And it did that most of the day. Kind of slowed down late in the day. And then it took another run. So as I started analyzing it and looking at it, I came to the conclusion that if you're going to trade counter trend, if you're going to trade against this moving average, okay, if the price is above it, you're trading against it, okay? If price is above that 14 period SMA, you're trading against it. If you're going to do that, the only way you can logically do it is with a tight stop. So like right here, you see we got a down arrow, it starts to pull back, but then it bounced and went higher. Now this time it got a down arrow and went through it, but it came back up. So to avoid getting stuck in these extended moves, the thought is if you are trading against the SMA, you trade with a tight stop. You don't let something go against you. If you want a lower risk trade, you wait for it to cross below the SMA. Now you're going to miss some of the move, but it's going to end up being a better trade. If it crosses back below it, that would be an exit point. And I'm going to show you what happened today with this same stock. This morning, actually, it sold off very dramatically at the open. This was where a lot of the traders got out in profit when it sold off right out of the gate, dropped down to $54. So those that held over got out with a nice profit. And thankfully, at that time, it had already crossed below the 14 period moving average. Oops. So at that point, I need to do something real quick. I need to turn off my scroll. So I don't keep scrolling back. Okay. So this morning it sells off, and it's trading below most of the morning. And then what happens? It crosses back above it, and then it begins its run higher. So again, you had an opportunity to short right through here, but that was a short-lived move. You went with a tight stop, you probably still made money. Get back long again, continue to ride it. We give you a long signal with the up arrow, and then ride it. You can see right in here, actually, it crossed back below the SMA, the 14 SMA. This was midday today. Actually took a short. Now I made a decision to use a tight stop, and I got stopped out with a small profit. But actually, had I just given it the room to run, you can see it stayed below the SMA all the way down until it got to the VWAP, the VWAP, the volume weighted average price. This move through here from where I was in 58.96 was a $2.50 move down. When it broke below, the entry was after it broke that moving average. I just didn't stick with it long enough, but it sold off dramatically. And actually, it has continued to go down even further throughout the trading day. So what we're using the SMA is, we're using it as a gauge of risk, basically. Okay, it's a risk management tool. If you're going to trade against it, you need to know that you're trading in a much higher risk trade. So how do you handle that risk if you're going against that moving average? You use a tighter stop, or you take a smaller position, or you don't even take the trade, right? Those are your choices. You trade with a smaller stop, a smaller position. You don't take the trade. You trade with a tighter stop. Because if you're wrong, you can always get back in, right? The other thing you can utilize it for is for helping you to maximize your runs. When you catch a stock that's on a pretty good move, as long as it stays, if you're long, if it stays above, or if you're short and it stays below, that will help you keep you in the trade, allow you to stick with the trade longer. So what we utilize, you'll see on the charts, we have the clear lines, which is buying and selling momentum indicator, the red and green line, and it's got arrows when the lines cross. We have 3 different pivots that we utilize: daily pivot, volume weighted, daily pivot, Fibonacci pivot, and DMARC pivot. We look at daily pivots and we look at weekly pivots. We also measure or look at the opening range, the first 5-minute and first 15-minute range, high and low. We have an indicator for that. And we use RSI for overbought. We use Williams %R, which is also a measurement of overbought and oversold. And then 3 minutes chart, we use Bollinger Bands. So on our 1 minute, we've added that 14 period SMA. And, you can see where when a stock is down in a downtrend, it stays underneath it. Once it crosses back through it, you're in the uptrend. So you use that as your guide to manage the risk of your trades. So let's go through, we'll look at different charts to see how that could help us throughout the trading day. It's amazing how using something so simple as just a moving average can actually really help maximize your profitability. And we had several traders today that started using it, and they saw some very good results in their trading just from help them avoid, for one thing, trying to short against an extremely strong trend. Like you don't want to try to short up against this right now because it's accelerating and the lines are actually diverging from the SMA and the clear lines. But let's go through and I'm just going to put a 1 minute chart up and we'll go back and see how this could have helped out today. So this morning, had you shorted Apple, Apple was trading below the SMA most of the morning. It hit up against the bottom of here's your first 5 minute low, bounced up, actually hit it, started to come back down and then broke it. So when it broke it, that would have been your exit signal. It actually ended up going to the volume weighted average price and then ultimately rolled back over, stayed below it most of the day, most of the morning. And then it crossed back above it. So you had a good place to go long to ride it back up. You already had 2 up arrows. So that was 115.25 to 115.60s. Traded below it most of the middle of the day. Crossed back above it. And then right now we're just moving below it. Let's I want to find one that gives a really good solid here. Amazon. I don't know if any of y'all trade Amazon. Actually, Amazon this afternoon. So Amazon kind of hits some tops right here, starts to roll over. You get a down arrow, breaks this fib resistance, and then trades underneath it for about 10 points. Breaks up above it, goes back below it, drops down another 5 points before finally coming back up. So that gives you a pretty clear picture. You're just managing the trade with your stops. You might have gotten stopped out when it kind of came up through it and closed up above it. You might have, depending on where your stop was at that point. And then when it crossed back above, if you got in long, then you're riding it. You're using this as a risk tool, a tool to help see if you're trading counter trend with a trend or against a trend more clearly. I don't know who that was, but if you have a question, please submit it through the chat box. So Baba, actually earlier, you had an opportunity to be short in the morning and you were underneath it, and then it crossed over it. So this was, I actually did a test right in here. I did a test, and because we were above it, and I said, okay, this is a riskier trade. If you're going to get short right here, this is risk because we're above it. And sure enough, what did it do? It hit it and bounced off of it. So that was a real small 13 cent. And it was a good thing I got out because it turned and ran 80 cents. So actually it went higher, went over $1. So it will help manage that risk. Tried it again right here in at 300, 0.27 out at 299.84. So it crossed through it and then was able to get a profit back on that second trade. There's going to be some periods where in the day where it's not going to be as clear of a picture. So that may be a time where you don't even trade at all. Fred says, I find also if you're trading with the trend, watch for price to retest and then continue, finally breaking back through. Yeah, which was similar to what we saw right here. You know, it came back down and then went back into the trend. So this would have actually been a better turnaround trade, you know, go back in long right here versus staying short or trying to reshort it, turned it around and gone long. How to check a 100-day or 200-day moving average? What is the 52-week high and 52-week low? So there are different, you can add, I have right here the ability to add in 52-week high and 52-week low. It's part of the quote. So I don't show those. I don't need to see them, but I can add that on. And then if I want to add a 100 period or 200 period, it depends on what time frame. Are you talking about on a daily basis or intraday, Ramesh? You can use any moving average, you know.
It is like daily or weekly. Anything you can take an example and show us.
Sure. So if you want to, like this is a daily chart. If I want to add a 200 period moving average, I just go to add edit indicators and I can add, I just switch it to a 200 or I'll add a 100 and then I'll add another one. Whoops. Hold on. I'll add that as a 200. You can put whatever indicators you want on here. So there's a daily chart with a 100 and a 200 SMA. Yeah, you can add any indicator. There's you know, the great thing about MedVet is they have a wonderful list of indicators, on chart and below chart indicators. There's, I think, close to 200 indicators in their toolbox, so to speak. And I haven't messed with most of them. You know, I I do think you can kind of get overkill with indicators where it's just like too much. So we've already added quite a few things, but whatever would help you out in your trading, you can always add on. That's Yeah, that's the great thing about this system. You can customize it however you want. If you want to keep it real basic, you can keep it real basic. I have some of my users that literally they just want clear lines and that's all they use. You know, if I go to my two chart layout, this is just pure clear lines. This is, you know, month, week, day. So that's your trend. And then here's your intraday 10-minute. And I can switch 10, 3, 5, whatever I want to see intraday. But that's a pure clear lines. And I do have volume weighted average price. We like that. I can turn on and turn off candles if I want to, you know, the clear lines are buying and selling momentum. They're not technically price. So to see price, you can turn on and turn off the candles. But this is, if you're just doing chart evaluation and you're looking at trends, you want to do a quick review of a bunch of different stock trends. You just quickly go through the stocks and then look at the trend, day, week, month, real quick, and you can see pretty clear picture pretty fast of what's going on. And you'll notice a lot of the NASDAQ stocks, the monthly trend is kind of coming to an end. They've kind of hit a peak and started to roll over. And then, if you're trading intraday, then we have an intraday layout that we utilize for more active trading. It has a lot more indicators on it because we're trying to pinpoint entries and exits and minimize the loss. But here's the thing, you're going to have some losing trades throughout the day. I mean, not every day is going to be perfect. And I'll be the first to admit I'm not the greatest trader out there, but what I'm good at is cutting losers and letting the winners run. And today was an example. It's not a big day, but I had 4 winning trades, 2 losing trades, and 1 flat trade. And the net gain was a little over a point total between all the trades. Not a very active day today either. I didn't do a lot of trading. It was a very minimal amount of trading. It comes down to that money management aspect. So, what we try to do every day is there's nothing that's going to predict the future. It just doesn't exist. And there's nothing that's 100%. So, you might see something and then everything changes. Someone sends out a tweet or a piece of news comes out or, anything. So what saves you is your money management, cutting your losers quick and letting your winners run. And even you can have days where you're 40 or 50% successful and still at the end of the day make money if you're using good money management. If you're cutting those losers quick and taking 10, 15, 20 cent losses and letting your winners run and picking up 40, 50, 60 cents on the winners, at the end of the day, at a 50-50 day, you're still ahead. And that's something that we do day in and day out. Now, there's the rare instance every once in a while where something does get away, like what happened yesterday with JKS. They let it get away from them, but they held it and they got out this morning with a profit. So my goal as one of the principals of equity-alerts.com with my partners, Jim and Lindsay, is to help our community, our trading community. All right. I want to help our trading community best figure out what's the best way to manage risk. So we're always looking if there's some other indicator, something that will help us, we're open to it. We added in, a few years ago, we added VWAP because it's a good indicator where stocks bounce off of and where they come to when when they get way away from the volume weighted average price, they tend to come back to it. So it's a good helpful indicator for getting helping you determine where something might go to or where it might turn. We when we used to only use daily pivots, and when we got Medved, we started experimenting and we added in, they had a DMARC pivot and a Fibonacci pivot. And then we started discovering, well, on different time frames, you can see different things depending if you're using pre-market data or not using pre-market. So we have a combination of 3 different pivots that we look at. Again, just to help us determine where something may go to, when you're trying to figure out a profit target or where something might turn around. So after yesterday's experience, of course, I'm like, well, what can I do to help my traders, help my community manage the risk of something that's just a freight train? So that's where I started looking at, different SMAs and said, okay, if we put this 14 period SMA in, you can still trade against it, but the rule is if you're trading against it, you better have a really tight stinking stop, right? Better not let it get away from you. If you're trading inside of that trend, you don't have to worry as much. And you can see intraday where these moves, when it gets, if you're short, it gets underneath it, you get a good move. If you're long and it gets above it, you get into a good move. Short below it, good move. Long above it, good move. It's just a guide. It's a guide to help manage your risk. If you're trading above it, guess where your stop goes initially? Below the line, right? And then you manually move your stop up. If you're shorting against it, right, you have to have a tight stop. Once it gets below it, then you can move your stop right at it on the line or just above it. So like right through here, right? When Microsoft rolled over, if you shorted right in here, you were still above it. Hold on, let me expand this so you can see it. If you shorted right here because we had a double top, you said, "All right, I see a double top here. Now I'm above the SMA. I'm above the SMA." So I instantly know it's a higher risk trade. But visually, I see this double top right here. I say, okay, I'm willing to take that risk. I'm going to get in, but I'm not going to give it a lot of wiggle room. I might use a 20 or 25-cent stop, let's say. If I get in here, I use a 20 or 25-cent stop. That keeps you in the trade. You didn't get stopped out. Once it breaks below that SMA, then I have a better feeling of comfort. And then once it's clearly below it, well, I can initially leave my stop. You can move your stop right into this level. When it gets below, we look for something else. This was the first 5-minute high. This is a opening range indicator. So I could move my stop once we get below that. I can move my stop just above there to give it breathing room, right? As it continues lower, I can just keep manually adjusting my stop down to at different points. Keeps going lower, I keep moving my stop down. So maybe down in here, I see these tops. I move my stop there, right? And I keep moving my stop down. I'm still out of harm's way. Still out of harm's way. And you might have gotten stopped out. Well, guess what? Right here. Here's your target, volume weighted average price. You probably got out when you hit VWAP because we use VWAP as a target right here. This is VWAP. So when you hit VWAP, you had a target to take profit, then you're out. And then once it crosses it, guess what? It starts trending higher. It gets to volume weighted average price right in here. And that's where the trend reverses and then it begins trending up. Now, guess what you could do? You turn in here when it crosses back above volume weighted average price, you get a signal right in here, you go long, right? Where's your initial stop? Well, how about just below the SMA? Keeps going up, you move your stop, you see a trend line. Actually, you have fib resistance. So you put your stop just below fib resistance, comes back down, test it, starts to break out, start moving your stop up. Manually move your stop up, stop up. At some point, it comes back down and hits your stop and takes you out. But all you're doing is using that 14 SMA to help you manage the risk, to help understand that if you're getting in before you cross through it, you don't give it a lot of room. Same thing right here. Right as it rolls over, right in here, if you shorted it, you either wait for it to get through it, or if you short it right as it's breaking it, you're going to go with a tight stop, 10 or 15-cent stop. And then guess what? Once you're in it, you got some wiggle room, your stop goes above the SMA. and it stays in, and then you start manually trailing it down. 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 And guess where it goes to again? Right here, VWAP. When it hits VWAP, you take your profit right here. Or if it goes through it and then back up, here's your profit target. We use VWAP for profit targets.
Hey, Kipp,
Yes.
it's Dan. How you doing?
Good.
Hey, when I'm watching you trade, are you actually waiting for red and green arrows, or are you doing that more on a feel or just a gut reaction as to what's going to happen?
Both.
So both. Okay.
Most of the time, I'm waiting for the arrow to appear. Most of the time.
Okay.
Sometimes, if I see like a really nice double top and it's at a pivot, I might jump before that. But
Okay.
no, most of the time, I'm waiting for that arrow to come in.
And is it a 1 minute chart you're using for that?
30 seconds up for the first 45 minutes and then to a
Okay.
1 minute. Yeah.
Okay.
Yeah. Just because, in that first 30 to 45 minutes, we're so volatile that half
It's
minute.
fast. Yeah.
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 You need it. And
Yeah.
you might get a couple false triggers when you're on the half minute,
Yeah.
but the key is managing it with reasonable stops.
Yeah, I mean, I can see that my downfall, I do really, really well for 3 or 4 days, and then my money management just sucks. It's just, I'm taking big losses rather than just getting out quickly.
Yeah. That at the end of the day, you have to cut the losers. You can't carry those things because we don't know if it's going to end up running up against us 50 cents or $1 or
Yeah,
$2. I mean, you don't know.
yeah, yeah,
Especially lately, there's a lot of these stocks that the trends were so like Jinko Solar. I mean, come on. The
yeah.
trend
I
on
get absolutely clobbered yesterday on that.
yeah. And I mean it just was a freight train. Now,
Yeah,
our brain logically says, God, this thing is way overdone. It's got to come back down. And guess what? Today was the day.
yeah.
It came back down.
Yeah,
Those
my
that
my yeah, my problem was I kept adding until I kind of said to myself, "Oh my God, I got to get the hell out of this thing,"
right,
because who knows where it's going to stop.
exactly. So
Yeah.
instead of adding, you just either when you see it's rallying up off that 14, you just don't take the trade or you wait till you can actually see a nice clear signal. Or if you get in, you better have a really tight stop. And if you're wrong, just give up on it. Don't. I know mentally, because it's hard for me too. When I see these things that have been running like that, I'm like, it's got to run, it's got to turn, it's got to turn, it's got to turn.
Yeah.
But
Yeah.
there's some days that you just don't do it, and I'm learning to be better at stepping off and saying no. It's just like yesterday. You saw I only did Jenko once. I
Yeah,
took
you got out. Well, but that was my other problem yesterday. First, I let it run and I added. Then I get out, and then it looked like it was going to dump. So I get back in again, and of course it runs, and it was like, it turns out to be a nightmare.
yeah, yeah,
I'm thinking from now on, it's kind of like one and done. If it doesn't work the first time, look for something else to trade.
right. Just move on. There's always
Yeah,
something else out there. You know.
yeah. If you don't have any other questions, I can you. I know this is so redundant for you. When I'm trading, I'm usually limiting in,
Yeah.
and then when I try to set a stop and a limit, I don't think I'm doing it right because it doesn't allow me to set both a stop and a limit. So you click, you limit in, and now you're in the trade.
Yeah. Who's your broker?
TD.
Do you have a bracket? Do you have the
I
ability to
can't
do
use the bracket. Yeah, is that how you would do it?
Yeah, you have to use the bracket.
Okay, all right.
Yeah. So just go in and select bracket,
Yeah,
and then so here I'll do a trade. Well, hold on. I'm watching this. I don't think there's enough time. I was gonna say I'll short Jinko here and then put a bracket on. But yeah, if you just once you're in it, just click bracket, and then
yeah.
you can set your stop and your limit.
So first click is stop, second click is limit.
No, you'll just hit bracket.
Yeah.
Here, I'm just going to do, yeah, I'll do it. What the heck? Oops, hold on. Dang it, it just dumped. Okay, I'll show you. I'll just show you what a bracket, oops, hold on. If you hit bracket, and then you'll hold it down and you'll see there's two sides to the trade.
Oh, yeah. Okay.
Right? So one's the stop and the other's the limit.
Got it.
Yeah.
As long as you send that in, it'll activate both.
Correct. Yeah.
Got it.
Yeah. And then once it hits one or the other, it'll cancel the other order.
Okay, so it does cancel the other one. All right.
Yeah.
Only one other question I have, if nobody else is asking.
Yeah, go ahead.
Changing from like a minute chart to historic chart.
Yes. So the one of the easiest ways, if you want to quickly look at a historical, is from
Yeah.
your minute, just right click and go up to historical. Now
Oh,
you
it's right. Okay, it's right there.
Yeah.
All right.
But
Yeah.
you might have to set it up correctly. It may not be set the right way. So you might have to, select 100 periods, make sure you've got the clear lines on it. I just have volume and clear lines.
Oh yeah. Okay. Yeah. So you add in whatever you want to add in.
Add in whatever. And then what I would do is go into templates and
Yeah.
save it, set it as your default for historical.
And then
And then
any historical chart you open up will automatically default to that layout.
when you set it as default. And then also I would save it too, because like right here I have it called My Daily.
Yeah. Yeah.
Or, there you go. Yeah. I have some other ones that I put in there, like monthly pivots and historical with indicators. So you can add
Yeah.
different things. You can have different layouts.
So for poppers and droppers, are you actually really keying in on historical charts?
No.
You must to get them, right?
I do we analyze that in the pre-market. We look at
Yeah.
the once the market opens, I'm not. No.
Yeah.
Only evaluating in the pre-market to know what the trend looks like.
You're just looking at the action in front of you.
Yeah.
Yeah. All very helpful. I love doing this, but I got to figure out how to make money with it.
You got to cut those losers.
That's like I'm telling you, it's the hardest thing to learn, I think.
Yeah. Just
Yeah.
get in the habit. If you're using a similar layout, put your stop, have your stop ready to set it on the other chart. So like, hold on. So like if you market or limit in and then click stop on this chart so that as soon as you're in it, you can come over to this chart and then get your stop in right away. So you're not hesitating.
Okay.
So you're real quick to get it going.
So set the stop right away, no matter what.
Right away. Don't hesitate. Because if
Yeah.
you're wrong, you need to be out, period. Look, it's easy to make back 10 or 15 cents. It's hard to
Yeah,
make.
no, I hear you. And every day I stick to that. I do pretty well.
You don't, and you get, yeah, I know.
Yeah. It's when I let them get away that it just kills the day. Sometimes kills the week.
Yep. You can give up a week's or more of profit
Easy.
if you're not careful.
Yeah, easy.
So I'd much rather, it's easy to make up dimes and nickels and, 15,
Yeah.
20 cents. It's much easier. It's hard. It's tough to make back $1 and $2.
Yeah, we were
It
just
goes
looking
back-
at JKS is rolling over now. Look at it. It's
Bounced right back. Yeah. It goes back to that. And I'm not sure who this is, but they said the 5 outcomes. It goes back to the 5 outcomes, right? Big
Yeah.
loss, small loss, break even, small gain, big gain. So get rid of the big loss, right? That's the most important one.
Yeah. Yeah, it's funny. You feel a whole lot better at the end of the day if you lost $50 versus losing, 2,500. That kills you.
Yep, absolutely. And we've all had those days. We've had them. They're no fun.
No, it's just miserable. Yeah. Love the good days though. That's fun.
We all love the good days.
Yeah. Hey, listen, thanks for talking. Appreciate it.
Yep, you bet. Thanks for chiming in. I
No
appreciate
problem.
it. I do have some other questions I'm going to get to. I think I've covered pretty clearly at least how to utilize the moving average, and I hope you guys will try it out. We're kind of, I'm going to call it in a test phase. I'm pretty happy with it so far. So and the traders that used it today found value in it. So we'll, I think it'll definitely help in mitigating that risk. It'll help you to visually see, if you're really fighting something or not fighting. You don't want to battle against something that's just super strong. You want to wait and let it come to you. Remember, don't force trades. Let them come to you. Question was, how do you put delta column in an option chain? So you'll have to open up your option chain, and then if you put your mouse over the top of the column and right click, there's something called column chooser, and then you can pick and choose. I already have delta on my chart, but if you use gamma, or you can add any of the other Greeks, or if you don't want it, you can remove it. But put your mouse over the column header and then select column chooser, and then highlight whichever one you want to do. Hold down your mouse and drag it up to where you want to put it on the column. And it should stay up there. Once you put it there, it should save it to the chart. Every time you go back into your option chain, it should be there. Did you catch that, Aono? Did you see that? Okay. Question from Jamie: how do you change permanently the number of preferred shares? So there's a default number of shares that you can set per account. So you go into your settings, and then under settings, under account. So if you have multiple accounts, you do it for each account, okay? So I'll pick this account. This is my Webull Live account. So you go over to where you see transaction value. You can set a size there, but right here, 500. So I'm going to round to the nearest 100. Quantity minimum 100, or I can set that at 50, and then a max, and I can whatever transaction value minimum, and then apply. So what'll happen is when you're in that account, it'll round to the nearest 100, and you can set different accounts at different levels. Oh, hey, Gorge. Hey, good to see you. I was wondering who that was. I didn't see your name. So if you have a handful of different accounts, you can, if you have one bigger account, you trade bigger positions, you can adjust that one to bigger default orders. You have if you want to always start with 100 shares, you can set it at 100. Jamie says rules are hard to follow. Rules can be very difficult to follow, but it's important. You want to make sure you're following the rules, because we have rules for a reason, right? Rules are there for a reason. If you don't follow them, you're going to get in trouble. Some great questions today. We have about a little over 10 minutes to go in the trading day. I'll open this up to any additional questions. Yeah, Jamie says we all broke the rules yesterday. It was unusual, so we are okay, people. Look, it happens. You have to know your risk. You have to know your risk tolerance. At the end of the day, you got to know what you're willing to do and what you're willing not to do. And thankfully, this morning that's sold off, and everybody that held overnight came out of it smelling like roses instead of something else. But, I'm still upside down in NVIDIA. Thankfully, it's starting to come back down, so I'm gonna give it another couple days. I may bail by the end of the day tomorrow. We'll see. So what I wanted to do is, if we don't get any more questions, I'm just going to review some more charts and see how using the SMA can help. Here, I'm going to do it like this. Hold on. Let me take my 1 minute chart. And you can try it even on a 2 minute. You don't necessarily look. It works on a 1 minute, 2 minute. It even works on a 3 minute. Depends on what you trade with. What's up with? You want me to look at BYD? Yeah, look at that. So this is the 2 minute. Here, this is most of the trading day. So you'd be long most of the afternoon. Don't try to fight it. Stay inside that trend. Short from the long from the open, and then you could have shorted through here, right? Zoom. When it broke below, short. Short most of the morning, long, short, long, short.
Hey, Kipp.
Yes.
So as your blue line is moving up, are you moving your stop as it's climbing? If it's working out to the long side,
Yeah,
so
you're just trailing.
you adjust your stop as you go.
Yeah. What I
Yeah,
would do is look at other indicators like different pivots, or if you
yeah,
use the first 15-minute fib levels,
yeah.
use that fib level to help. Whoops. Hold on. Here we go. Use the fib levels as your guide to where you would set your stops. I would
All right.
use
So
either
as it
the
goes through, you would move
pivots,
it.
really the pivots you can use,
Yeah,
and you can use VWAP as a target, but yeah, you're just going to trail it like you normally. Any other trade, you want to just trail it. And I would say when you're way out from it like this, you can
yeah,
give it a little bit of wiggle room. When it starts getting up close to it is where you want to tighten up a bit.
yeah,
And then
yeah.
if
Okay.
and then when you see it break it again, then you can continue to give it room as it clears. Whether you use first 15-minute Fibonacci's or pivots. Let me remove the fibs real quick. So we had. I'm going to draw so you can see. So let's say you took this long right here, okay,
Yeah,
on Walmart.
yeah.
You broke VWAP, so your first stop once you broke it, would go underneath VWAP. Then you came up and you hit this R1, so your next stop once you broke it would go below R1. When you
Got it. Yeah,
broke FR2, your stop goes below it. So you set your stop just a little bit below it. When you broke, this is first 5-minute range, the opening range for the first 5. Again, the stop. But here we got into a situation where there was nothing. Where do we set it? You can trail it when it gets close to starts to get close, or it gets the double top and rolls. Then you're going to bail out pretty quick when it comes back through that SMA. Or if you switched over and went and put in your hold on. If you went to your Fibonacci range for the first 15-minute, I should have left it in there. We might have had some additional levels to look at once yeah. So here's a really interesting thing. Oh, never mind. That's not interesting. No, actually here's something really interesting, actually. So we broke the 127 right there. So another stop. And then we got to the 14140. That's an institutional fib level. We hit it. We came down hit the 127, and then we retested it. The retest and fail, that double top, would have been your signal to tighten that stop, and then when it came back down, you're out.
And then if it crosses, it's a short.
Yeah,
Possibly.
yeah. Then you turn it around and you short it when it comes back through, and guess where your stop goes? Your initial stop goes up above
Right.
of
Right.
that fib level or the blue line, and then until it breaks another level. It doesn't break another level till it gets back to the first 5-minute high. That actually was the first 5 and 15-minute high. When
Right.
it
Where are you
breaks,
getting the fib levels? Are those in the indicator list?
I have them. If you don't have those, there's some additional levels I'd have to give you
Okay.
for the fib extensions. Yeah. Um, but when it breaks this line right here, guess where your stop goes to there. When it
Yeah.
breaks that line, your stop goes there. It struggles through here. Your stop, you might have gotten stopped right here when it came back up. But you're using these different points. That's why we like the different pivots on the charts, because it gives us points of reference where we can move stops to.
Yeah. Yeah. Right now, I'm just using R1, R2, S1, S2.
Yeah.
That seems to be okay.
And that does work. You just get another layer when you add in the demarc and I think really the Fibonacci pivots are ideal, but sometimes we see them go to those demarcs and then just make a
Yeah.
quick turn. And then I also really like using the two the my 1 minute chart uses current day data for calculation. So prior to current day, it's in when I say current day, it uses this morning's pre-market. But remember, pivots, they don't look at today. Daily pivots look at prior day, yesterday and
Right.
back. So
Right.
when you're using what I'm talking about is right here, view current day. That
Okay.
looks at going behind today. It only looks at the intraday quotes. So it's going to calculate the pivots, oops, a little bit different versus when I go to my 3 minute chart. And let me move this back in its place so I can show you. When I go to the 3 minute chart, this is using, when I click view, always. So it's when it's calculating those pivots, it's taking into consideration all of the pre and post market data going back in time to
Okay.
calculate the daily ranges. So that's why sometimes we'll see on one chart, like right here is FR2 at 141.70,
Yeah.
but I got FR1 up above it. They're in different places.
Yeah.
Weirdly, they go like, where was the reversal on Walmart today? It was a combination of the 14140, but we also had R1 on that 3 minute chart. So
Oh
you
yeah.
start to
Okay.
see
Yeah.
these levels that on one chart you may not see, and then you see it on the other one. And it's just, like I said, this is all, we came up with this because we started playing with them because they got
Yeah.
all these great indicators, and we started seeing these things. We're like, okay. And then we started playing with, well, what happens if you use this versus that, current day, you know, you know, no after hours versus using after hours. Then we get a little variance. I guarantee you that most of the trading world out there is probably just looking at, when they look at pivots, they're just looking at the pivots based on intraday quotes. They're not looking at the pivots based on the extended period. So we get that. I think we sometimes get an advantage because we see something that a lot of other traders may not see. And that was,
So if you see two levels that you're coming up into,
yeah,
that's probably even more helpful, right? I mean,
yeah, when you get, well, we call it confluence. When you get
yeah.
confluence and you get multiple pivots together, two
Yeah.
or three different pivots, or you see on two different charts and they're two different ones, or you
Yeah.
get, if you start drawing the fibs where, this was a confluence right here because it was the 14140 of the first 15 minute, and it was R1 using the extended session data. So this was a great place to exit your long, B, turn it and go short.
Yeah.
And
You
the
can
charts
see
gave
the
you
four
the
spikes up and then it comes down.
and the charts gave you the clear lines, gave you, you had 2 arrows on the
Yeah, it gave you the cross. Yeah.
3 minute, you had arrows on the 1 minute. It's clear. It's very clear. It's just, here's the biggest issue. There's so many stocks that we can't always focus on everything. We're jumping around a
I
lot.
know. I know.
So you end up missing. If you focus on, a handful of stocks, like
Yeah.
4 or 5 stocks, you will see these more frequently.
Yeah.
I've got a few guys out there, they just watch 4 or 5 stocks and that's it, because they learn how they trade, and they start seeing these levels because they start lining up every day, and they use the pivots and they use the fibs, and then
Yeah, it would make sense. I mean, if you can get to know how it moves,
yeah,
you can probably
and then
do
sometimes you got
real trading, just a few of them. Yeah.
sometimes you might have to take one out of the mix because it's not following the levels anymore.
Yeah.
But in an ideal world, you want to have 4 or 5 stocks. If you're into that, you want to have 4 or 5 stocks that you're kind of focused on, and then occasionally you're looking for it to add and remove 1 or 2 from the list, because we all know at some point they kind of stop following those cycles.
Yeah,
The
sure.
cycles have a certain life to them.
Yeah. All right, cool. Hey, this is really helpful. I appreciate it.
Thanks. That's why I do this.
All
Help you.
right,
All
have a
right.
good night.
Yep, you too, Dan. Have a great night. And markets have closed. I want to thank you guys for tuning in. I hope it wasn't too much information overload. If you have any questions about what we discussed today, or want to rewatch this, I will be posting it to our YouTube channel. You can go to equity-alerts.com and click our YouTube link, and it'll be up later today. But again, if you have additional questions, don't hesitate. You can email me, Kipp at equity-alerts.com. You can text me or call me if you have a question. I leave my afternoons open to you guys. I'm here to help. I'm here to answer questions. If you need some assistance with something, if you need a little guidance, don't hesitate to ask. Don't be shy. That's what I'm here to do. I'm here to help. I want to make sure each and every one of you are successful. I want to make sure you stick with us for long time. I know many of you all have been with me for close to 20 years, and I want you to stick with me for another 20, 25 years until I can't do this anymore mentally or physically. But don't hesitate to ask. Look, there's no dumb questions. I'm here to help. So with that being said, have a great afternoon. I will see a lot of you guys in the morning at Equity-Alerts, and hope to see some of you back again next week. We're here. I'm here every Tuesday and Thursday at 3 o'clock Eastern. Have a great evening. I'll see y'all tomorrow.